Welcome to the Cryptosphere. This is Cryptogenic coming at you. Today is Wednesday, February 2nd at 10:07 a.m. here in sunny California. And I can say that it is sunny California because the sun has come out. Now, we learned from Annie a long time ago that the sun will come out tomorrow. Bet your bottom dollar. Tomorrow, there'll be sun. Because when I think of a day that's gray and lonely, I just lift up my chin and grin and say, all right, so you need that. You need that today. To be engaged in the crypto market, you need the assurance that the sun will come out tomorrow. Bet your bottom dollar that tomorrow there'll be sun. In today's video, I am going to explain Benjamin Cowen's bull market support band. And what you are looking at is the bull market support band that Benjamin Cowen refers to in all of his videos. First and foremost, let me say that I think the man is brilliant. I follow the guy, and I like what he says. But if you look at this bull market support band, it's basically a region comprised of two moving averages. One is an SMA, which is a simple moving average, and the other is an EMA, which is an exponential moving average. So the red line is the 20-week SMA, or the 20-week simple moving average, and the green line is the 21-week exponential moving average. So one is a 20-week, the other is a 21-week, and you notice that there's a range between the two of them, right? So the first line of resistance that we've got to get over in order to resume the bull run is the 21-week EMA, which is at 46,000, and the 20-week SMA is basically at 51,000. So if we get above 51,000 and establish support there, the bull run continues. As long as we're beneath this, the bull run is on pause. And actually, Benjamin Cowen would say that this is the definition of a bear market. For him, a bear market is defined as anytime we close beneath the bull market support band. So now it's a bear market resistance band, Benjamin Cowen would say. Now, what's the difference between an SMA, a simple moving average, and an EMA, an exponential moving average? Well, the difference between an SMA and an EMA is this. The SMA, or the simple moving average, which is the 20-week here, basically takes the previous 20 candles at their close. So a green candle closes at the top of the body. So this candle here, it closed right at about $37,883. Red candles close at the bottom of the body. That's the only difference between a red candle and a green candle. Red candles start at the top of the body and close at the bottom of the body of the candle. And then the wicks are just what happens in between the open and the close. Green candles start at the bottom of the body and close at the top of the body. So a green candle simply records a week in which we closed higher than we opened. Okay? So the candle opened here and closed here. Now, if you took the close of each of the previous 20 candles that have closed, okay, and you simply add all of those numbers up and then divide by 20, you would get the average close price of the last 20 candles. That number is the SMA, the 20-week SMA. That number is $50,996.97. So if you took the last 20 candles, added up all of their closing costs, the close of each of those candles, the price at the close, divided by 20, you would get the 20-week simple moving average. However, the exponential moving average is different. First of all, this is the 21-week exponential moving average, so it takes the last 21 candles. The difference is each of the last 21 candles, if you go back 21 candles, however that is, wherever that is, each candle becomes exponentially more significant than the previous candle. And so it's not just a flat calculation, add up the last 20 and divide by 20, or add up the last 21 and divide by 21. But the value of the previous close is exponentially more significant than the value of the last close. I don't even know how to do the calculation of an exponential moving average. Thankfully, TradingView does that for us, and that's why this number is 46,000. Why? Because this move here is exponentially more important than this move here for the EMA. And so why do people look at both EMAs and SMAs? The reason is the EMA is closer to what has happened recently, but the SMA is more flat over the last several weeks. And so these become indicators for us that give us an opportunity to kind of get a feel for what's coming next in the market, simply looking at the averages. And so, if you were to come up here and just close these candles, this is really what Bitcoin has done. This is really what Bitcoin has done. It just moves around above and below these averages, but this is the path that Bitcoin has taken. Simply taking a look at these averages. We bring the candles back and we see, we've just capitulated beneath, broken above, capitulated beneath, broken above, capitulated beneath. And that really is the journey of Bitcoin. What these moving averages do is they provide us with a bit more stability. Now, the second thing that we can see, it's not just when the price of Bitcoin breaks beneath this band, but when the green breaks beneath the red, when the exponential moving average breaks beneath the simple moving average, that becomes a bearish indicator that the upward movement is beginning to die down. If we take a look at this, when we broke beneath the red here, it indicated that we were getting ready to close beneath the red. Secondly, when we break above the red, it indicates a bullish move is coming. So I'm not only going to be looking for the price of Bitcoin to break above the support band, I'm going to be looking for the green line to break above the red line. That will become a bullish indicator as well. So if you look over here, the green broke beneath the red before we saw any major bearish action. So the green broke beneath the red before the price broke beneath the support band. So now bringing this back, you can see that this is similar. It's a shorter time frame than the 50-week, and this is the 50-week SMA. This is just a simple moving average. But you could see these are simply indicators that we've broken beneath first we broke beneath the support band. We tested the 50-week, and you see we had support, relative support at the 50-week for 1, 2, 3, 4, really 5 weeks here. 50-week was support. And then when we capitulated beneath the 50-week, boom, that's where we came down to test the 100-week. So the first line of support is the support band. The second line of support is the 50, and then the 100. And if we break beneath the 100, the next line of support is the 200. And if we capitulate beneath the 200, the next line of support is the 300. So these are simply ways. Now, when we say this is a bear market, or Benjamin Cowen says this is a bear market, he's using the simple definition of a bear market, his simple definition, which is anything beneath the bull market support band. It doesn't mean that it's going to extend for years. Notice, we had a bear market over here, according to his definition, and it only lasted a few months, and then we broke back above it, and the bull market continues. So these are little micro moves. I mean, they're micro moves, but they take weeks and even a few months. But overall, I like to look at the macro moves, and if we look at the macro, this is still an uptrend. It doesn't mean that this is not real. It doesn't mean that this is not substantial. This is real. This is substantial, but it's just a moment within a macro move. And when we look at the macro move, it's an uptrend. It's not a downtrend. We've got higher highs and we've got higher lows. We've bounced at this line. We've got 3 touches of this line and a bounce. Okay, we've touched this line twice. So I'm not prepared to say that Bitcoin's move is over. I think Bitcoin's going to come back and retest at least the top of the support band. And if we can break above it, we're coming back to retest the top of this line here and make a new all-time high. And if we break above this, then we're heading for mid 150 to 300,000 range. I don't think it's over. Now, what tends to happen is the narrative gets very bleak down in here. You notice that when we're up here, the hopium is off the charts. But once we get down here, that's where people start to lose heart. The comments start going negative. You know, the news is all negative. Everything that you hear in the media is negative. But, you know, these are the most exciting times when you're down here. And they're the most exciting times that, you know, I keep saying this. And, you know, people get mad at me for saying this, you know. But this is a tremendous opportunity to buy THETA token at $2.81. Come on, people. When it was up here at $15, everybody was excited, but you didn't have very much of it. Most of you didn't have very much of it at all. You should have been praying for it to come down here into $2.81 so you could buy some of it. You know, you say, well, I don't have any money. I mean, $100. I mean, think about it. $100 over here when it was $15 would buy you what? 6 of them, 7 of them. $100 now will buy you like, my math is so bad, 30 of them or something like that, right? You know, so, I mean, you know, if THETA token actually is breaking $1,000 within a 3 to 5 year horizon, which I fully expect, then even investing $100 down here and getting 30 of them right now, that could amount to $30,000+ in 3 to 5 years. So rejoice, people, rejoice. Yeah, so I'm not going to cover a lot of these, simply to say this is a clear uptrend. This is a clear uptrend. And this is a clear uptrend. The market is still moving up. And honestly, I believe that we've already hit bottom here. 32,993. I believe we've hit bottom. And I've given you my reasoning. But we shall see. We shall take it one day at a time. What I would like to say to you, however, in the meantime, is one of the ways that you sleep in peace, wake in joy, and walk in love is to make the decision not to allow cryptocurrency to become the totality of your hopes and dreams. Don't wrap up all of your hopes and dreams in crypto. Because what'll happen is you're watching charts every day, and that's all you're doing. I'll talk about that in another video. All right, that's all I got for you today. That'll be enough for today. Do me a favor, smash that like button, hit that subscribe button. Remember, this is not financial advice. I'm not a financial advisor. I'm neither telling you to buy nor sell nor hold nor refrain from holding nor refrain from buying nor refrain from selling nor think about buying nor not think about buying. I'm simply telling you what I see, and I appreciate all the love. I appreciate all the support. I appreciate all the comments. I appreciate all the subscriptions. Check out my Patreon at patreon.com/cryptogenic. Got some awesome things going on there on my Patreon. For $18, you get the Cryptogenic portfolio with all of my buy up to levels and all of my take profit levels. The entire strategy is laid out there for you. Got an exciting announcement. I'm going to put out another video today with an exciting announcement about the next level on my Patreon. Plenty of room in the titanium level of my Patreon, which has a once-a-month meeting, and that meeting is going to happen next week. So if you're interested in jumping in there, no more room in the platinum level, but there's plenty of room in the titanium level. So if you're interested in having that meeting, that group meeting that I'm going to be having next week on Zoom, in which I'm going to do question and answer, technical analysis, getting ready in the next day or two to update the entire portfolio and provide an update for all of my patrons. I'm doing technical analysis on every chart in the portfolio. Also at the titanium and gold levels, I take TA requests, technical analysis requests, so check that out as well. But above all, make it your aim to sleep in peace, wake in joy, and walk in love. Everything that I give you, everything that I produce, everything that I provide is designed to empower you to do just that. That's my prayer for you. And with that being said, This is Cryptogenic signing out. Testing 1 2 3 microphone check 1 2 3 I'm a G 1 2 3 welcome come one come all. Welcome to the Cryptosphere. This is Cryptogenic coming at you. Today is Wednesday. Welcome to the Cryptosphere. This is Cryptogenic coming at you. Today is Wednesday, February 2nd at 10:07 a.m. here in sunny Northern California. And I can say it's sunny because the sun will come out tomorrow. Bet your bottom dollar that tomorrow there'll be sun. And this is an appropriate song, a very appropriate song. Welcome to the Cryptosphere. This is Cryptogenic coming at you. Today is Wednesday, February 2nd at 10:07 a.m. Welcome to the Cryptosphere. This is Cryptogenic coming at you. Today is 10:07 a.m. here in... Today is 10:07 a.m. All right, here we go. Welcome to the Cryptosphere. This is Cryptogenic coming at you. Today is Tuesday, February 2nd. No, it's Wednesday, February 2nd. All right, here we go.